Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com runs down the major markets. He tells us the junior caps showed some life while gold lost some of its heat, and Bitcoin may have topped out for the time being. He checks out crude and the U.S. and Canadian dollars. Founder of Armstrong Economics, Martin Armstrong, says the real strength of the U.S. dollar isn't oil, but consumer spending. He tells us a strong policy to tax the rich wouldn't result in all that much money for the government. Publisher of the trendletter.com, Martin Straith, tells us why he thinks the Fed may hold off on cutting interest rates and comments on whether gold will top $2,300. Also, at the end of the show, we'll have a company showcase update from RecycLiCo Marketing Director Tony Mitchell. We'll talk to Ross Clark right after this.
RecycLiCo, making lithium-ion last forever. RecycLiCo's patented recycling process achieves up to 100% recovery of battery metals from lithium-ion batteries for electric vehicles, including cobalt, lithium, nickel, manganese, and aluminum. RecycLiCo Battery Materials Incorporated trades on the TSX Venture AMY, on the OTCQB AMY.ZF, and Frankfurt ID4. For more information, visit RecycLiCo.com or phone us at 778-574-4444. RecycLiCo, making lithium-ion last forever.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. You can find him on X at Charts by Ross. Welcome back to the show.
Always a pleasure, Jim.
How would you describe what happened on the stock markets this week?
Well, I would say that this was a steady climb. We had a bit of a pause for a couple of days, but overall a good move on the upside. The employment numbers at the end of the week came in enough to provide a little push right at the tail end. So if you've got pretty much everything, the S&P, the Dow, the NASDAQ, all closing at marginally higher highs for the for the year. They've just now taken out the levels that we saw back in July. So we're into the Santa Claus rally, or at least the seasonal one, just still has legs. The corrections are just so minute here. We get 1 or 2 days at the most with flat to downside action and then back up again. So things are pretty good as far as the equity markets are concerned. And if we look at the Magnificent Seven, or the old fangs, they've had a bit of life too, after taking a bit of a pause. So the leadership is there. The small caps, which typically at this time of the year have some buoyancy and historically have actually outpaced the large caps, like the S&P. They were up almost 1% on the week, which is a little bit better than the other broader indices, but they've had an exceptional move off the low of the turn of the month last month. So the bias is still up. Seasonality would say that there could still be a bit of a hiccup between here and the year, maybe year end, but overall, with the trend being up, you still want to be able to buy the bips for a move into January. And I think as we get into the midpoint of January, we'll be a bit more cautious overall, but we want to make sure we just let things evolve here on their own. The bond market has had just an exceptional move off the low back in October the 23rd, when we got our capitulation readings in the bonds and the notes. And as of the middle of the week on Wednesday, looked as though it was getting overbought. We put out a special on letting people know to expect a bit of a correction here. And as of Friday, it looks as though we're starting to see that. But overall, the bond market still looks reasonably buoyant. So bit of a pause in here, and look for upside action in bonds as well as stocks.
What's going on with gold?
One of the biggest weeks we've had in a long time. Sunday night, we saw all-time highs in terms of U.S. dollars. Price got up to $2,150 in the Japanese markets, and then that spike up gave it all back by the time we walked in here into North American markets, so that it was only up marginally on the day by the time we walked in, as I say, to our markets. The week as a whole ended up being a downer. The range is huge. The daily charts, we've come back down to 2,000, having peaked, as I say, at 2,150. And as of Friday, we're starting to see actually some oversold conditions because of the magnitude of the decline that we had seen. So the trend still, as far as the seasonals, you expect to see this good rally in December, January. And as of now, the correction we've been thinking during this upward trend, we would correct back to the 20-day moving average. We did that as of Friday, and starting to see a little bit of an oversold condition. So I would think within the next week to 10 days, you might be bottoming out in here, and then look for the continuation on the upside. Going to be looking at the 50-day moving average as a pretty key support. So you'll watch that one pretty important as a key level. The volume on Sunday, Monday, was the highest we'd seen since February, and going all the way back a couple of years. So it's going to take a bit to eat through that, but I'm sure that it's going to make an attempt at it.
What's going on with crude?
Crude, we are right at what should be the optimum seasonal low. We've got all the pieces in place here for a bottom, and as of Friday, we got a very, very nice reversal, and it looks as though we've put in the low, and it's not just for crude, but if you take a look at the complex, whether it's heating oil or gasoline or even natural gas, we're at a point where you'd expect to see this move off the bottom. So, we bottomed under $70, or actually under 69 on crude oil on Thursday, closed over 71 on Friday. And if this is the seasonal, the next key level we want to watch for is probably $73. That had been the support during November that we were holding on. If we can close back through 73, I would say that we're going to have enough momentum to carry this forward. And typically, the rally would last into February, and in good years, it'll take you out to April. So as long as the economy is going through a slow pace right here and not falling apart, I think you've got a pretty good chance for the oil prices to improve from where they are.
What about the U.S. and Canadian dollars?
Currency-wise, the dollar index was part of why you saw the reversal maybe in the gold market, and the dollar ended up around 104, just thrashing around more this week than anything else. But for us, I don't get any major signals out of it right now. There was a nice bottom here, a couple of weeks ago, but there's nothing to write home about. Likewise, on the Canadian dollar, it's just been biding its time in here. Got up to 74 and a quarter, which was a nice, almost to a little over 2-cent rally off the low when the commitment of traders numbers were exceptional. And if we're going to see some strength in the oil market, I think the dollar has a chance to move here. I guess the other one that's really been moving along really strongly has been the Bitcoin market. Coinbase and Bitcoin both having exceptional rallies the last couple of months. And Bitcoin is at the point now where we can be looking for an interim top pretty soon here. It's trading around 44, let's call it 45,000. And 48,000 and change looks like an exceptionally good target on the upside. This thing has come from 26,000 just in September. It's been one of the big runs. But anything over 48,000, and I think it will be ready for a pretty big correction, and we'll be looking to take a trade there.
Yeah, Bitcoin started off the year at 16,500. Bit of a rise.
Oh, it's been and this was at 68,000. 2.5 years ago.
Right.
So this has been quite a run, and typically. This thing started at 5,000 and went to 68,000. Then went to dropped to 30 and went back up. So it's got volatility, and volatility creates opportunities. And so that's the name of the game, isn't it? If you're a long-term investor, that's one thing. But if you're looking for opportunities to be moving in and out, Bitcoin should be one that's on your list.
Ross, thank you so much for the update.
Good to be with you, Jim.
My guest has been Ross Clark from chartsandmarkets.com. Find him on X at Charts by Ross. Coming up, Martin Armstrong, next on This Week in Money.
Always consult your investment professional before making any investment decision. Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
My guest is Martin Armstrong, founder of Armstrong Economics, available online at ArmstrongEconomics.com. He's speaking to us from Florida. Marty, welcome back to This Week in Money.
Well, thank you for inviting me.
You have a new book out, Marty. The title, The De-Dollarization, What They Overlook Will Wipe You Out. Can you tell us a bit about the book and where people can get it?
Well, you can get it off of our site. It's in PDF form. We'll probably turn it over to our publisher soon, but it's available, I think, for $25 or something on our site. But the main thing I think is that people have to understand is that there's a lot of nonsense about the de-dollarization going on, saying, "Oh, the BRICS is going to displace the dollar and all this stuff." They don't really understand what backs a currency, and the wealth of a nation really is its people. And the United States is it's the largest consumer-based economy. And you take Germany, for example, it's a mercantile economy. And by that I mean they manufacture things to try and sell it to somebody else. And as a result, the Germans, individuals, as far as a net worth, I mean, they're less than Italians. Because they keep their taxes very high, they're afraid of inflation, things of this nature. And rather than develop a domestic consumer-based economy. Now, China has looked at the difference between U.S. and Germany, for example, and China is moving in the direction of trying to create their own consumer-based economy. And but that's really what the whole world after World War II allowed it to really blossom again. Because, I mean, Germans were trying to sell their Volkswagens and their BMWs to Americans. China was selling, everything from different medical equipment to the pink umbrellas for a cocktail. So everybody was looking to sell things to the American consumer. The Japanese were able to rise from the ashes by basically doing the same thing, selling Toyotas and things of that nature. So That's why China is moving more towards a consumer-based economy. And this idea of de-dollarization, you'll hear, because they're going to price oil in other currencies, that will kill the dollar. The problem with that is all propaganda. What the real strength of the dollar has got nothing to do with what's behind, the government, the fact that oil is going to be priced in dollars or something else doesn't matter. What happens is that you look around, you see all these emerging markets, and when they borrow money, where do they go? They have to go to New York. And you'll see the same thing. You can buy them on eBay. When Britain was the financial capital of the world, you saw China issuing bonds in British pounds. So you have so many emerging markets, trillions of dollars emerging markets have been issued in dollars because that's where they raise the money from. They don't have the capital base themselves. So this idea that the BRICS is going to displace the dollar is kind of absurd because, really you're looking at Russia, Brazil, and China is going to suddenly replace New York City and lend money to the entire world. I don't think so. Every country falls, and the U.S., will eventually decline as well. We're in that a declining phase. But as far as this, BRICS displacing the dollar and things of that nature, no. In fact, the dollar has been stronger because of war. And it was actually, if you look at just the history, U.S. was virtually bankrupt in 1896. That's when J.P. Morgan had to put together a $100 million gold loan to bail out the U.S. Treasury. By the end of 1914, basically, from there on out, the U.S. started becoming the financial capital because Europe went into World War and they're blowing each other up, and that's when Britain lost the financial capital status. By the end of World War II, the U.S. had 76% of the entire world gold reserves because all the money fled here. When you got tanks running down the road blowing each other up, you're going to leave your money in the bank over there. So that's what happened. And now you have wars in Ukraine. You have NATO trying to put an embargo up there in the Baltics to poke the Russian bear and hoping that they would attack or do something up there. You have wars going on in the Middle East. And over in Asia, you have this, the constant threats against China over Taiwan. You have North Korea shooting off missiles to test them over Japan. Basically, we've got clients around the world, and I can tell you they're all kind of like been moving to the dollar. And they realize, well, maybe I better at least have some of my assets over there. So that's really what you're looking at. And Canada would also benefit to the same degree. But, there's a lot of discontent about, Trudeau and his kind of reckless spending programs. They're that same way about, Biden, of course. But, you then have this shift between public assets to private assets. Just like, Alberta suddenly stood up and, declaring the Sovereignty Act against Trudeau. You're seeing this rise globally. I was just on the phone the other day with a member of Congress, and Trump is this, that, and I said, you guys still don't understand what's going on. I said, it has nothing to do with if Trump is a great guy or a bad guy. They don't like you. And, what do you mean? I said, look, Trump is 47 points ahead of anybody else in the Republican Party. And the polls show that he's ahead of Biden. I said, now look at Argentina. They just overthrew the government down there. Brazil. All right. In Germany, the AfD won in Bavaria. And now if the election was held tomorrow nationally, they would have they have surpassed every other party. The Greens have fallen to like 7%. And everywhere you look, it's the same thing. People are just getting fed up with politicians that have done nothing but lie and manipulate society, and they, all they ever say is, "Oh, you're going to tax the rich." Does it ever lower anybody else's taxes? Never. It just fills their pockets more. So you're looking at a backlash that's starting. And so at this stage in the game, it's U.S. assets that are attracting a lot of big money. I mean, this is why real estate keeps going up. I mean, I live in Florida, and honestly, I still get at least 3 calls a week. You want to sell your house? No, thank you. Where am I going to go? Chicago? But, I mean, traffic is at least doubled down here. It doesn't make me feel that great. But, this is what's going on. You have a massive migration in the United States from the Democratic blue states to the red states. And you go up to New York. I mean, there's still a lot of stores that are closed and never, went bankrupt after COVID. Everything's open down here. It's, the blue states got, extremely crazy. And the more people that leave, instead of reforming, they just raise taxes. And, what are you going to do? I mean, some of the Goldman Sachs even moved their most profitable division down here to Boca Raton. Miami is quickly replacing Wall Street. And that's what's going to happen. I mean, New York is just not going to be there. I mean, you're looking at, when I lived in New Jersey, my father's law partner told me, he says, look, if you die in New Jersey, tell your family to drag your body across the river before they tell anybody. I mean, they take half of whatever you earn, and then when you die, they want the other half. So, Florida, Texas, there's no income tax. And it's not, when you're talking about, 10%, it's very meaningful. And you look at California's at 13.5%, and they want to raise it to 15%. They don't get it. The more they raise it, the more people, the number one state people are leaving is California. And instead of saying, gee, why are they leaving? Oh, we need more money. Let's just raise the taxes. And it just sends more people out.
We're hearing in Canada the real rate of inflation is 38%. What's the latest on the real inflation numbers in the U.S.?
Well, the real inflation in the U.S. on an average basis is probably between 18 to 20. When you start looking at other areas of more, what people are going to be spending on, you're in the 30% range. You're looking at gas, things of that nature, food. You have these climate change people that are just completely insane. They have no idea of what they're even proposing. You just had, John Kerry down there in Dubai saying that 7% of climate change is now being caused because people have air conditioning and heat their homes. So I don't, what are they trying to do? Kill off half the population? They want us to basically, freeze to death. And you went down to Dubai. We have an office in UAE, And I can tell you, it's still in the 90s at 12 o'clock at night. I mean, I think you need air conditioning down there. But, they come up with these things that are just insane. And he's after agriculture. Everything supposedly creates global warming now. And I was, just before this phone call, I was on a conference call in Germany. And, they're absolutely buried in snow over there. And what do? They come out, it's because of climate change. Nonsense. I mean, I was over there in the 1970s and got snowed in the Frankfurt airport twice. So much you couldn't even leave the airport. It's just, everything that happens, they just blame climate change. That's it.
Doesn't the climate change constantly? And I fail to see how, like in Canada, Trudeau's solution to everything is to throw a tax on it. And the carbon tax, how does that influence things like the Earth's orbit, solar activity, or volcanoes? I don't see how a tax is going to change volcanic activity.
Yeah, it's just simply punishment. And now you have the World Health Organization coming out and saying, we should put excessive taxes now on soft drinks. They use taxes to punish people. And this is what our computer's basically showing, that we're looking at basically a new form of government coming. These people have never stopped even once to take a look at things. But historically, what causes revolutions? It's always raising taxes. American Revolution, no taxation without representation. Yet these people do the same thing over and over again throughout history. They think that they can just rule us, put in more and more taxes, and because they need it. And they never look at reform, even once.
Income tax was brought in the First World War to help pay for the war, but it only affected the top 5% of income earners. I guess we're still paying for the war.
Yeah, then World War II came, and they said they came out with Social Security. And, to pay for Social Security, we have to make sure that everybody pays taxes, and then they created the payroll tax. So it went down to the average person and no longer the rich. Look, if you confiscated all the money of the rich, take, Bill Gates' money, you take, Bezos, etc., just go down the top 100. It will not even balance the budget for 1 year. It's a great, propaganda thing to cover up, their insatiable appetite to constantly grab more and more money. You look at Janet Yellen. She stood up and wanted to bring auditing down to $600 to get those evil rich. I don't think Elon Musk is selling a used bike on eBay for $600. It's just, absolutely absurd. I was in Australia back in the 90s, and they were passing the luxury tax. And the way they got it, get everybody to agree to it, they said they were going to tax all the rich. They said they're going to tax their Ferraris, their fur coats, and their French wines. And I maybe saw 2 Ferraris down there when I was in Sydney because they were already taxed 100% to get them in. Fur coats, maybe you wore in the wintertime down in Melbourne, certainly not in Sydney. And nobody ever gave me any French wine because Australian was just good. But it was a great slogan. They passed it, and then what was in the luxury tax? All electrical products. So your phone, you name it, TV, suddenly, anything that required electricity was a luxury.
Your CPAP machine, your iron lung, your kidney machine. You had to pay tax on it.
Yeah, it's you should see what's going on in Ireland right now. They're trying to push through by Christmas, and they call it the hate crime law, but it's applied to corporations. So they're basically saying a corporation is going to be liable, even criminally, and unless they can prove that they have done everything in their power to make sure there's not a single thing on there that they have on their social media that people use that had anything to do with what they term is a hate crime. Effectively, that is 100% guaranteed total censorship. And they're putting it on the companies, and if you don't do it, you're going to be fined or imprisoned. I mean, honestly, what I would do if I was the head of that, I would say, okay, fine, no problem. We're going to block all internet. There'll be nothing there going into Ireland, and then let the people see what these people are really doing.
Of course, a lot of companies are in Ireland because it's basically a tax-free zone.
Yeah, I mean, it's when I was doing a lot of the reorganizing a lot of the Japanese companies. I put airlines there in Ireland because they had the best tax deal. If they needed, skilled labor for manufacture like automobiles, I put them in England. So this is the way it goes. I mean, they use these things because they know they're out of control. So now when they're using it and calling it hate crimes and total censorship, it's basically to cut off free speech. And the whole digital currency thing that they're moving towards. Trudeau got away with it. He froze people who just donated to the truckers. This is what they're going to do with the CBDCs. If they don't like Trump, you're not allowed to donate to Trump. They can control everything at that point. This is their dream.
This week, the Bank of Canada held its central rate at 5%. The year-over-year inflation rate as of October in Canada, officially at 3.1%, with real inflation rates significantly higher than the official one. Could we see higher interest rates yet in Canada?
Your longer-term rates are going higher, and the same in the United States. Because as you have these spending sprees, and you have wars going on, wars are the number one cause of inflation. It was the Vietnam War that broke Bretton Woods and the gold standard. I mean, honestly, it's just, to me, it's shocking that anybody didn't realize it would collapse. I mean, if you fix the price of gold at $35 an ounce and you keep increasing the amount of dollars that you're actually creating, I think a third grader with a pocket calculator could figure out when it was going to bust, But, these people they only look at the immediate situation. What do I need to do? I got to win this next election, and they'll say whatever. But your long-term rates are what central banks cannot control. That's what the whole quantitative easing was about, that they bought in longer-term government bonds. It was to reduce the mortgage rates and things of that nature, because they can't affect that. So they were trying to reduce the supply to bring the rates down. They can control the short-term rate, the overnight rate and stuff like that, but they cannot control the long-term. And then, honestly, there is just, each little group just does whatever they want to do, and there is nobody that coordinates or understands anything. you have like in the United States, you have these neocons out there constantly bashing China over Taiwan. We'll go in there, we'll support them, blah, 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 right? Well, China is the number one holder of U.S. government debt. So they've been selling off billions every month. And it's like they don't put two and two together. It's like, okay, fine. Interest rates will go up because there's no bid for the long term. If China has stopped buying it, who are you going to sell the next tranche to? And, honestly, it's like I feel sometimes I'm just, dealing with governments. It's like, I feel like I'm teaching kindergarten.
Well, two jobs in the world that you don't need a diploma for or any training, parent and politician, and they're probably the two most important. Is credit being constricted in Canada and the U.S.?
Well, the markets will constrict it because you have this shift where people are beginning to question the validity of government debt itself. And when Trudeau froze accounts of people who merely donated to the truckers, that was a major totalitarian type event, a draconian event. I mean, the whole rule of law is we're supposed to have due process of law, which comes from the Bible. All right, when you have Cain and Abel, when he calls and he says, "Okay, where's your brother?" Supposedly, God already knows that he's dead, but he still gives him a right to explain and to be heard. That's what due process comes from. You're supposed to remain innocent until proven guilty, and you have a right to speak and confront your accuser. All of that was gone. You just donated, that's it, we're confiscating your money. And no court, trial, nothing. So, that is a real tyrannical move. And unfortunately, this advice comes from the World Economic Forum. And look, I know Schwab. He is a control freak. You look at what he has accomplished, besides the people he's, in your own government. Leyland, the head of the EU, was on his board. Okay, the head of the IMF is on his board. All right, everything. The head of the ECB, the central bank, on his board. He has infiltrated governments around the world, amazingly. You got, John Kerry, the climate czar of America, preaching his agenda. And, when he says you'll own nothing and be happy, he is a Marxist. And he has no real life experience. He's an academic. And most of the academics that I've ever encountered, not all, but I would say the majority, tend to be very left-wing. And the government should control you for your own good. You don't know what you're really doing. And this is the way, unfortunately, Schwab has infiltrated many governments. Canada, New Zealand were two of the top examples. Also in Australia. Everywhere you go. He has people stuffed in different governments around, and he's very clever. And what he's been doing is actually trying to influence and force his ideas upon the entire world.
What is your economic confidence model seeing and predicting?
Well, we're coming up with a major turning point, which will be May 7th. I am a bit concerned about it. It is projecting from there into 28, we're going to see more of an economic recession. So meaning that the economic growth will be less than the inflation rate. So we're really going to have a stagflationary period, mainly because people are going to be less inclined to buy government debt. and so that tends to push up the long-term rates in particular. But the turning point of May 7th also just happens to be the inauguration day of the swearing in of the next president of Russia. And I am concerned that if it's not Putin, the people in the wings behind him are far more aggressive. They're the ones threatening nuclear war, etc. And I can tell you from reliable sources, the criticism of Putin is exactly opposite of what you read in the press. They feel over there that he's been too soft, and that he did not want to really invade Ukraine. He was just there to defend the Donbass, which is Russian occupied. And he did not want to go into Ukraine, and his critics feel that he should have gone in like the West went into Iraq, and this war would have been over in 6 weeks. But to him, Kiev is where the Russians started. So to him, basically, wiping that out would be like to us, wiping out London. So my concern is that, you even had the head of Chechnya coming out and say that they should have nuked Kiev, and he said, we don't want to go there. But you have to understand, it's psychological warfare. What they do is they always demonize someone that, the head of a state. They did that to Saddam Hussein. They tried that with Assad in Syria. And they're doing that to Putin. They even did that to Donald Trump. You do that, and that gets everybody riled up. They hate Russians. Oh, they're all bad, etc. That's how they sell war. Simple as that. But so the criticism that Putin gets, and why I'm concerned, is that over there they're basically saying, wake up. We're not at war with Ukraine. We're at war with the United States and NATO. And to a large extent, they're correct. So it's not just a local civil war. And if you get somebody else there besides Putin, they're going to, look at it from that perspective. And that's what they've been, screaming about over there.
Is Socrates seeing any panic cycles during the first half of next year? It's showing mainly around the economic conference model. You're looking at May, June, and in general. In January, we're looking at probably an important turning point. So you have December was a very significant what we call double directional change. So you saw this crash here that started in gold, and it may continue into early January before it finds support and turns around back up again. But we're looking at 2024 is probably, you can call it the year from political hell. It's not just the U.S. elections. You've got elections going off everywhere. You got Russia going on. The elections for the new head of the EU is next year. Everywhere you look, British elections are coming up. It's like the whole world is coming. All elections have seemed to have coincided with 2024. And it's like you put them all in a jar, shake them, and then take the top off and see what comes out, I guess. Gold had a significant spike higher this week. Does this likely signal the beginning or the end of a move?
Well, I think longer term we're looking at gold, rising, mainly because you're looking at assets rising still against government assets. It's not really a dollar versus gold thing. And if you look at when gold, took off, you saw the same rally in the Dow. It's capital from outside North America trying to get in. And as again, it's because of just political uncertainty everywhere else you look, from Middle East to Europe to Asia. It's like, well, where do I go?
Does Socrates see stock markets reaching new highs in 2024, 25, and even into 26?
Yes, particularly after 24. We're on the verge of really a complete collapse in trust in government. So I can tell you that our computer's been projecting for the 2024 election that I don't care who wins, neither side's going to accept it. We've gotten to that point. You can't have all these, started with Hillary back in 2016. Oh, the election was rigged by Putin interfered, blah, 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 and all the rest of the stuff. And then you had the 2020 election, which does appear as if it was rigged. And it's just going on and on and on. And at this stage in the game, Trump is 47 points ahead of anybody else in the Republican field. And if there was an actual fair election, he would be Biden. But I seriously doubt that they're going to allow him to be president again. I think they'll do whatever they can, including even assassination, mainly because he's against war. And I said I had gone down to, in March of 20, I went down to his Mar-a-Lago for dinner, and I was the first time I was ever actually impressed by any head of state. He actually at that time said he wanted to pull the troops out of Afghanistan, but the reason was he said he was sick and tired of writing letters to families to say their son died for God and country, and he said, what are we doing there? They've been fighting over borders for 1,000 years. What difference are we going to make? And that's why John Bolton came out against them. All the hardliners are against them. Victoria Nuland and her husband Kagan. I mean, all they ever do is bash Trump. Why? Because they are the warmongers. They're always advocating war. John Bolton hates Russians so much, I think he would invade Canada if he thought 10 of them were there. He's just incorrigible. When the Iran shot down a drone, he wanted to invade Iran. And Trump said no. Nobody died. It was just an unmanned, drone. Any excuse whatsoever, he wants to simply invade and always wage war. And I've known a number of these people over the years, and the only explanation I can offer is that communism fell all by itself. 1989 with Tiananmen Square, and then the Berlin Wall falls, and then Russia falls in 91. It fell because it was just, communism is not sustainable. It's highly inefficient, and the economy just could not function. And so I think honestly that these people always want war, and they're just mad that communism fell and they didn't get to shoot anybody. So to them it's still the same thing. I mean, I was actually on the phone with one congressman. He's calling, the Chinese Communist Party. They're communists. I said, they're not communists. Do you understand what communism even means? I said, look, communism means the government owns everything. Okay, you got plenty of billionaire Chinese. I said, you just don't understand. They didn't change the name of the party. Absolutely. Why? Because then they would have to take down the picture of Mao. It's more of a face-saving type thing. But, I mean, there are plenty of billionaire Chinese, the same as there are billionaire Russians running around. They're not, obviously, not communist.
What does Socrates see ahead for the U.S. dollar?
Still looks as though the dollar is going to be rising mainly because of capital flows. As wars begin to escalate, I would say, You're looking at also a rise in civil unrest because going back to that 2024 election, nobody's going to accept, I don't care who wins. Both sides are going to accuse the other. And so, you're just at a point where, the trust and faith in government is collapsing. And when you get that, you get the civil unrest. And so we'll be looking at civil unrest rising after 24, in addition to international war. And this is where we're basically heading. The dollar will probably peak out by around 27, maybe 28. And then, you've basically ruined most of the world economy, when, what the neocons did by putting sanctions on Russia, was basically shooting Western society in the head. Because once that happened, you took them out of SWIFT. That was a warning sign to every country. You either do what we tell you, or this is what we'll do to you. So China now has its chip system to compete with the SWIFT system, and you have even Iran. So basically the idea of a unified world monetary system, global economy is dead. You've polarized it, and just as you see, locally in politics, left versus right, this has happened on a global scale.
Does Socrates think commodities will be a good place or a bad place to be in the new year?
Well, commodities will be coming down a bit in 24. Like I say, our economic confidence model turns by May 7th, so we're looking at a shift early in the year rather than at the end of the year, and so you'll begin to see more of recessionary problems, but governments, because they have lost the confidence of the people and investors, they're not going to be able to keep the debt going. I mean, as everybody knows, I've advised many central banks around the world throughout my entire career, and I can tell you that they do not criticize each other or the government. However, Chairman Powell of the Federal Reserve just a few weeks ago came out and actually did. He said came out and bluntly said that the spending of the Biden administration is unsustainable. All right. That was a major statement coming from a central bank. The last time the central bank ever fought with the White House was 1951. So we're at that stage at this point in time where it's come right on target. I mean, it was we call it a 72-year cycle, and that's exactly what we hit from 2023 back to 1951. So we're looking at major changes in economics and the performance of just about everything from May on.
Are the housing markets in Canada and the U.S. in trouble following numerous interest rate hikes?
Some areas, yes. I mean, real estate is very diverse. But I can tell you from just checking the markets myself and to realtors, for example, down here, the higher end houses, like $1 million and up, they're just selling for cash. People know the CBDCs are coming, and a lot of people just want money off the grid.
Could we see a recession or even a depression ahead?
Not a depression. That maybe comes later when you're talking about wiping out government debts, etc. But that's what people have to understand. The Great Depression 1931 was massive, defaults. Virtually all of Europe defaulted. Britain went into a moratorium. You had South America defaulted, Asia defaulted, and that's what took down. There were some 9,000 banks that collapsed. So you need that sort of collapse in the government debts to create a depression. A recession is not, doesn't involve that per se. It involves the pre-stages. Eventually the debts are all going to be wiped out. That's just simply the way it goes, because it is, as Powell just said, unsustainable. You look at history, when does that collapse take place? Basically, what they're all doing is just a Ponzi scheme. They issue new debt to pay off the old one. And the problem comes when nobody buys the new debt. When they can't sell the new debt, then they default on the old debt. And that's, that is what's in our future. And then after 2032, I think we end up, at that stage looking at redesigning government and how we're going to prevent this sort of nonsense from happening again.
Is the growing demand for electric vehicles bullish for the lithium and battery sector that looks like it's bottoming?
To some degree, but honestly, the appetite for electric cars have been, even all the dealers have been petitioning Biden. We can't do this. Our lots are full with electric cars, and the public doesn't want to buy it. Even down here in Florida, if you did have a hurricane and you got to get out, what's an electric car going to do for you? You can get maybe a couple hours. It's not going to be good enough to actually evacuate.
On your website, Armstrong.USD, you had a cycle of coronavirus chart that goes to 2050. Is this a prediction that the scam, hoax, whatever you want to call it, will continue for decades?
Well, yes. I think, I think COVID was created in a lab. It was, but what you have to understand is a virus is basically like a living organism. And once it is released, whether it was intentional or unintentional, is irrelevant, because it will mutate. And, it will mutate to survive, just like politicians do. But I had COVID a couple months ago, and this version was longer than the other one, and it was just, it wasn't life-threatening, but it was just more of a hassle and inconvenience. That was pretty much it. But the doctor said, "Oh, you got COVID, and this version lasts about 3 weeks." But once whoever started it, how it started, and I believe it was deliberate, because I can tell you that absolute sources, unequivocal, 1 month before COVID, anybody even heard of it, there were phone calls made, a virus is coming. So I know that for an absolute fact. I'd swear that on my soul, and so it was. This whole thing has been planned, and this whole agenda of everything you look at is all about controlling society. The CBDCs, everything is about how to control us so they can retain power, because they know eventually they keep this up and they're going to have a major rebellion against them. So to them, it's like, how do we do this? Well, we have to crush them even more. They'll never reform. That's just simply the way it is in government. I saw one fancy, saying that a guy had, and it said that you can always vote your way into communism, but you have to shoot your way out.
Is COVID comparable to the Spanish flu of a century ago that killed 60 million people?
Well, it was a respiratory thing, yes. You can even Google and you'll find Washington Post, masks were useless. Google that and you'll see. All the studies showed that masks during the 1918 Spanish flu did not prevent anything. It didn't work. But these people do the same thing constantly. And to this day, I still see some people driving in their car all by themselves and they got a mask on.
We're hearing death tolls are higher than normal. Could they affect markets and economies?
Well, yes. I mean, look, the whole just take the Black Plague as an example. That was an extreme example, but about 50% of the population died. And before then, we had serfdom. And because there was a shortage of labor, because so many people were dying, that's when wages started to be paid. So it was really the birth of capitalism that disease sparked. So if we just published about pilots. I mean, heart problems have increased 1,000%. Everywhere you go. I went to get my hair cut, and there was two elderly women there, and they both lost their son-in-laws in their 20s after being vaccinated. It seemed to be the people that get the heart problems were the younger ones for some strange reason. I don't know. Right next door, there's a girl that was 27, and they had to get vaccinated, but they had already had COVID, but they had to get vaccinated to go on some family cruise thing. And the day after she was vaccinated, they came here with an ambulance, took her out. She almost died.
Are you using AI for anything?
Well, Socrates is all AI, but that's something I wrote back in 1970s. AI has been a term I would say grossly abused. People think of like the ChatGPT stuff it's fancy, very nice, but it's not really AI. It learns from machine language, from all the questions that are there, and knows how to look things up. Does it come up with new original thought? Not really. Fine, you can say, sing me a song in this guy's tone of and style of somebody else. I mean, that's fine. You're still instructing it what to do. Real AI would actually be able to ascertain different things on an original basis. IBM tried that with Big Blue. They came out and said, "Oh, it's going to find the cure for cancer," and it failed. It can't originally. It doesn't achieve original thought.
Is shoplifting profitable in California and New York?
Well, for the people shoplifting, I guess. I mean, they've ruined the stores in both places. And again, it's like the biggest problem with people in government is, one, they will never admit a mistake, and two, you can never hold them accountable.
Alberta invokes the Sovereignty Act against Trudeau. Could this be the canary in the coal mine for the breakup of Canada?
Absolutely. Look, you will see in Canada it will be West versus East. In the United States it will be North versus South. The primary difference, I would say, is if you look at the right versus the left, the right generally takes the position, you leave me alone, I'd leave you alone. The left is more like Klaus Schwab and says, well, I have an idea and I think it would be better this way, so you're going to do it this way by decree. And the left is also very clever. You take Bill Gates' father was, pushing Planned Parenthood, and he was opening up offices in minority areas because he was very racist in that sense. They wanted to reduce the population in minority areas. That's why they were largely, opened up there. Justice Ginsburg said even when Roe versus Wade got to the Supreme Court, it had nothing to do with women's rights. She said it was all about eugenics. And so how do you sell that? They sell it the same way, life insurance. You buy fire insurance, accident insurance, etc. When they tried to sell death insurance, nobody wanted to buy it. Oh, it might be bad luck. So they changed the name to life insurance and it was fine. But does it insure you against living forever? No. It just insures you until, when you die, they pay off. That's death insurance. So, with the whole abortion thing, they just turned it eugenics from that to women's rights. And you got the women out there to protest, this is my right, it's my body, blah, 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 etc. All that was very nice. When it came to vaccines, my body, my choice didn't matter, did it?
Beware May 7th, 2024, the Russian presidential election. What's so bad about that date?
That's the date when whoever is going to be the next president is sworn in. Why, our economic confidence model, these dates were calculated out back, in the 70s. They're fixed dates. I find it extremely interesting that the very day of the inauguration happens to be the very day of the ECM. The same thing happened with Trump. The very day that Trump was nominated or sworn in was the exact day when the economic confidence model. So I would expect, usually when that happens, that is telling you that there's going to be an important focus thereafter, which we should pay attention to, which in this case will be Russia.
It looks like the world is moving politically to the right. Are these new leaders being elected likely to have ties to the deep state?
Not really. This is why, you look at why are they against Trump so much and they're against, Kennedy. They only want people from the deep state area. They don't want outsiders coming in. I was down in Washington when Reagan won, and he was the governor of California, and they were all upset. And I said, what's the problem? And he said, oh, you don't understand. We're going to have to train him. This is the way they look at it. If you're not from their club, and they don't care if you're Democrat or Republican, that's irrelevant. You have to be from their club.
Are China's economic troubles likely to reverberate around the world and especially into real estate in North America?
Well, yes. I would think it's more economically rather than just a real estate thing. You have more Chinese influence there in Vancouver than we do have, down here in Florida, per se. So each area will be a little bit different, but China is clearly a target. You have a number of politicians in the United States coming out and actually outright saying that we'll be at war with China within a few years.
Does Socrates know if Bitcoin could disappear in the future, leaving a lot of bag holders?
Well, yes. When they do the I would say that the entire CBDCs, we have to realize, just as Trudeau, what he did with freezing people's accounts for just donating to the truckers, I would say that you have to realize that I think that was a trial balloon for the rest of the world to see, okay, did he get away with it? Did it work? And because when the CBDCs come out, I think, first of all, cryptocurrency, they will probably end up seizing, and they may then prevent you even buying gold or silver. And the whole object of a central bank digital currency is to kill the underground economy. So they're not going to allow anything as an alternative. If it's cryptocurrencies, I think gold will be probably in small quantities, coins or things of that nature. Silver coins, I think they'll be there for the black market, there's always a black market that's going to emerge. But the object of these people with these CBDCs is to eliminate cash, and they really think at that stage that they're going to increase their taxation collection by 35%.
Are people seeing through the climate change scam?
Yes. I mean, if you look in Germany, which was really gung-ho initially, the Greens' support has now fallen to 7%. You turn off people's heat, and they start freezing, and they go, wait a minute, this isn't exactly what I wanted to do in life,
Do you think more and more people are waking up to what's really going on?
It seems to be. I think that's what you're looking at with these political upheavals that are taking place. Argentina is finally, kind of like overthrowing the whole communist idea, So, you're looking at the don't cry for me Argentina era. It is all coming to an end.
Where's the best place for people to follow you?
Armstrong.Economics.com. We don't sell advertising, and you don't have to, put in your email or anything like that. We don't do major, marketing campaigns or anything like that. We believe in people's privacy, and so it's just open as a public service.
Martin, thank you so much for being on This Week in Money.
Well, thank you for inviting me. It's always a pleasure.
My guest has been Martin Armstrong, founder of Armstrong Economics, online at Armstrong.Economics.com. He was speaking to us from Florida. Coming up, Martin Straith, next on This Week in Money.
RecycLiCo, making lithium-ion last forever. RecycLiCo's patented recycling process achieves up to 100% recovery of battery metals from lithium-ion batteries for electric vehicles, including cobalt, lithium, nickel, manganese, and aluminum. RecycLiCo Battery Materials Incorporated trades on the TSX Venture AMY, on the OTCQB AMY.ZF, and Frankfurt ID4. For more information, visit RecycLiCo.com or phone us at 778-574-4444. RecycLiCo, making lithium-ion last forever.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Martin Straith, founder of Trend News online at thetrendletter.com. He's speaking to us from Coquitlam, BC, which is just east of Vancouver. Welcome back to This Week in Money.
Oh, thank you, Jim. Good to be back.
You published a chart in your last issue of the Trend Letter showing that the markets are forecasting a Fed rate cut as early as March next year. What are your thoughts on the Fed cutting?
Well, you've got the rate of inflation has been declining. You've got employment has been slowing, and this is exactly what central banks were wanting. They wanted to slow down the economy. Now, today, we just got the U.S. employment data came out, and it was stronger than expected. So that'll be interesting because the unemployment rate in the U.S. now has actually dropped down to 3.7%, down from 3.9%. So that's the lowest since July, and that kind of startled the markets a bit, I think. So it's going to be really interesting to see how this data affects expectations for rate cuts going forward. Given the employment data today, I suspect the Fed is not going to be looking to cut rates anytime soon. It's a really delicate balance, right? If they cut too soon, then inflation could ramp up again, and then, they'd be chasing it all over again. And then if they wait too long, you'll get deflation, and then very likely you get a recession. Now, if they do see a recession coming, then they will aggressively have to cut rates. And if that happens, the stocks are going to decline sharply because when the Fed cuts rates aggressively, especially if there's a recession, stocks go down. So, that makes perfect sense. If the economy is tanking, then it's not good for businesses. So stocks are not going to perform well. It's interesting that the markets want the Fed to cut rates. We just did a video. I just posted a video the other day just showing exactly what happens when the Fed aggressively cuts rates. And it is not good for the stocks. So I think that right now, given that the employment data is what it was, I don't think the Fed was planning to cut rates anytime soon anyways. I think that they're going to wait and really make sure that the economy is turning down. And they don't mind seeing some pain. They don't mind unemployment going up. They don't mind, inflation coming down. That's what they're looking for. Now, in Canada, I think that's a little bit different story because I think the Bank of Canada is going to start cutting rates before the Fed. Canadians have the highest debt to income ratio in the G7. It's at 187 or 185%. That means the Canadian households owe $1.85 for every dollar of disposable income. And another big concern for the Bank of Canada is that the Canadian mortgages are typically 5-year term, whereas the U.S. they're at 30-year term. And according to the RBC, they did a report that 60% of Canadian mortgages are going to come up for renewal between 2024 and 2026. And according to that report, for some Canadians, that renewal payment is going to go up as much as 84%. So, again, I think that the Bank of Canada is probably going to move quicker than the Fed.
Yes, nearly 200,000 jobs estimated to have been added to the U.S. economy. Also, the U.S. economy itself is driven by consumers, not by exports, like a lot of countries like Canada. Although in Canada, we're overly reliant on real estate to keep things buoyant.
Yeah, it's true. And like you say, as that report says, 60% of mortgages coming due. That's a huge sticker shock for people. And that's really going to hit that disposable income for Canadians.
And if they can't afford their house, if you want to see prices come down, wait until the foreclosures start and there are foreclosure sales. Something that wasn't allowed to happen during COVID. And so that was always part of the Canadian housing supply milieu. And now it's going to return, where you can buy a house for a bargain.
Yeah, it is interesting. One of the things I read, part of that report was that Canadians are incredibly loyal to paying their mortgage, though. They will do whatever they can to keep that house. So it is, hopefully by the time the bulk of those things come down, that the rates at least come down to a level that, it's not an 84% increase in your payment, because that's going to crush a lot of people.
What's your take on the stock markets today?
Well, long term, I'm really quite bullish for the equities. I think there's some short and midterm concerns. Very short term, meaning like next week, we're entering a seasonally weak period for equities. It's a very short period, but it's, we're entering tax loss selling season. So that's where, investors sell losing stocks to offset capital gains on stocks that have appreciated. And then also at this time of year, you've got mutual funds. So they're obligated to distribute their capital gains, their dividends, and their interest income for the year. So they're going to need to sell assets to fund those distributions. But that's usually, it's only usually like a 10-day, maybe a 2-week period. And then starting like mid-December, you typically get that Santa Claus rally. And we certainly expect that to materialize this year. So markets have had a nice run here, and if we do see this early December pullback, I expect it's going to offer investors a bit of an opportunity to increase their exposure at lower prices. Bigger picture, if interest rates keep declining, that's going to be good news for stocks. So I think any year-end rally should be able to run into somewhere around mid-January. Now, one thing to be aware of, starting mid-January, we do see a bit of a spike coming for volatility, and it's got the potential, I think, to rattle the markets a bit, and I think that will frighten a lot of the weaker players. So if it does happen, We expect a pullback would be more of a buying opportunity. So the big risk is what we just chatted about. I mean, if the Fed starts cutting rates, that would suggest that they see a recession coming, if it's not already there. And if they see that, then, obviously a recession is not going to be good for the stock market. So we should see a good couple of weeks here at the end of December into the mid-January, but then watch for some volatility mid to late January. But really, we'll be keeping a close eye on that, and we'll be alerting our subscribers. If we see a good buying opportunity there, we'll be firing out some alerts.
When you were previously on in early November, oil had hit your previous target of $94, then started to fall. You said it would drop to $74. Today it's under 70. What's up with oil?
Yeah. Well, oil was overbought when we last talked, and it was due for a steep correction. So we've certainly seen that. One of the big things for oil is, the OPEC plus cuts. They've been the big news lately because the actual cuts versus the announced cuts, man, they vary quite dramatically. The announced voluntary cuts were 2.2 million barrels a day. Well, I've been seeing numbers here showing that the actual cuts were less than 500,000 barrels a day. So supply was much higher than expected, and that's pushed prices down. Now, so oil prices have been on a steep decline here since that late September high, and that's primarily because countries outside of OPEC, particularly the U.S. and Iran, they've been pumping crude out at a pretty high clip here. Plus, you've got the worries about economic weakness in China, in Germany, and much of Europe, and certainly Japan. But, oil's technically oversold here. Today, it got a nice bump. That U.S. data helped. It's up about $1.70 here today, so it's sitting just under $71. So stronger U.S. employment data, that helped. You got more workers. They'll need to drive to work, so that all helps. Now, we're also entering a very strong seasonal period for oil. Typically, from early December, so right about now, it's really strong to mid-January. It then tends to kind of level off, and then it ramps up again in February. So we're looking at key support sitting at the triple bottom around $66. So we saw that happen throughout March and June, and that was our last buying opportunity we sent out. Near-term resistance is at 73, so that would be another $2 from where we are right now. And then there's a triple top at 78. So we tested that in November, and it held. So it's held 3 times now. So ultimately, oil's going to need to break through 73. If it can hold there, then it needs to crack through that $78 level. And if it can do that, I can see a run into March. So we're watching oil really closely here, and I haven't checked our models yet today, but I'm suspecting we'll be sending out some buy signals here real soon. So the key right now is how the global economy performs over the next couple of months. So that's shorter term. Longer term, we've got demand, India, other emerging countries. They're expanding. Many of these countries don't have electricity in parts of their country. They need more energy. They will ramp up demand. Also, we've got China's been struggling, but their economy is starting to show signs of improving, and that would certainly boost oil demand. And then on the supply side, it's this, we're seeing the U.S. supply pumping out right now, but we've seen a real lack of investment. Rig counts are typically they're going down. We publish rig counts every week, and they've been stuck around 500, and it's been on an ongoing downhill trend for the last year and a bit. So rig counts have been declining. Capital expenditure in that sector is down, 30-year lows. And what's the reason? Well, you got the COP28 meeting right now. You got governments and all these groups all over who just hate fossil fuels. So they've increased windfall taxes, they've increased regulations, and there's no new permitting. So when you combine all that, it's a pretty simple, a 5-year-old could figure this out. You increase demand and your globally concerted efforts to squeeze supply, well, that's going to put a huge supply problem over the next few years. So, I don't think we're going to see $100 oil in the next, couple of months, but I do think we'll see it next year, and we'll likely see 150 or even higher over the next 3 years.
What's with natural gas?
Oh, natural gas has been a huge disappointment. It's traded sideways for months since February. It's traded in, between $2 and $3. Now, since May, it started to move in an uptrend. So we started to see a nice trend line starting to build. It managed to break out to 350 in, what was that, like late October, early November, but it couldn't hold. So now it's fallen back. It's just dropped below its trend line, uptrend line, trading around 260 right now. Now, it is oversold here, so a bump is likely soon, but we're not going to see anything from natural gas until we see some cold weather hit, and hit hard, I think.
In early November, you were looking for gold to take another run at $2,070 and ultimately break through that very strong resistance point, potentially up to over $2,300. Well, gold did that, breaking through $2,070. Are you still looking for over $2,300?
Yeah, well, that triple top at 2070, I mean, that's been on our radar for months. I think we talked about it on your show for the last couple of times. And yeah, it finally broke through over 2,100 there. One of the keys long-term for gold is you've got, the U.S., Canada, and most of the developed countries are, they're running these massive unsustainable debts. And it's resulting in diminishing purchasing power for each of those currencies. So as we expect those central banks are going to want to get back to being dovish as they can, once they get through the inflationary cycle, that's going to, again, put more pressure on these currencies. So low interest rates are a tailwind for gold. Right now, the market is factoring in a Fed rate cut. Now, as we just discussed earlier here, I don't think that's going to happen for a while, but a Fed rate cut would be good for gold. So if we look at seasonality, starting right about now, mid-December, gold tends to rally right through to late February. It's trading today, just looking at it here, about 2017. So it's down almost $30 today here on Friday. So I would be looking for gold to try and form a base here around this level. And if we can push through and hold above 2070 for days and days, then yes, I think we could start to get a nice run up, up to that 2,300 level. Now, I really think gold's in the early stages of a multi-year rally. Initial support is right at 2010, so that's, it's only about $7 less than where we are right now. If that doesn't hold, we could have a drop all the way down to 1925. But, overall, I think gold is really starting to get some momentum here. Even if it pulls back, that'll just be a buying opportunity. Now, what has not happened yet is that we need to see the miners catch up to the bullion. So that's something that we're going to be watching for over the next little while.
What about Bitcoin? It's been on a bit of a tear.
Yeah. Well, it's kind of a similar story to gold, but definitely more volatile. We've seen Bitcoin and Ethereum both up over 50% since early October. I mean, Bitcoin's up over 65%, I think, now. So certainly volatile. Very interesting. Just the other day, we saw J.P. Morgan CEO Jamie Dimon. He was testifying for Congress, and his line was, if he was the government, he would close Bitcoin down. He's previously called it hyped up fraud, and he likened it to a pet rock. So Jamie Dimon is not a big fan, even though J.P. Morgan has invested heavily into blockchain technology. But while Jamie Dimon doesn't like crypto, we've got 13 firms. We're talking about BlackRock, Grayscale, Invesco, and Cathie Wood's ARK. They've all applied for Bitcoin Exchange Traded Fund, or ETF. And if approved, that would make investing in Bitcoin very easy for every investor. I mean, it'd be the same as investing in any other ETF or stock. you'd be talking about simply as a click of a mouse. Whereas today, I bought Bitcoin, about 8-9 years ago. And I mean, it was an incredibly cumbersome process, for the average investor. You have to get a digital wallet. You have to open an account on a crypto exchange. You have to do all kinds of ID verification, just a lot of obstacles. But if this were just an ETF, and the nice thing is a series of ETFs, then this would be a very simple process. One of Diamond's comments here also was that to him, the only use case for cryptos is for terrorists, drug traffickers, and tax avoidance. And I think he's really missing the point here. People are smarter than I think he thinks they are. People see high inflation. They see government's massive deficit spending. They see the constant rising of taxes. All of that eats away at the purchasing power of the local currencies. And today also, we've got 130 countries right now are working on creating their own central bank digital currency. And once they get that, then they will be able to control and tax every transaction we make. So I think pretty much investors see Bitcoin very similar to gold, and they see it as a hedge against, market turndowns, against inflation, and against, the infringement of personal privacy. So we've got ARC is the first filing. So they're first in line to go through the SEC. And I believe it's January 10th. So we're talking like a month from now where that's the deadline for them to make the decision on that application. Now, I just read that Kathy Wood, so again, head of ARC, so she believes that the SEC is going to approve multiple ETFs at once. And if approved, I think you're going to see a real big spike in Bitcoin and likely Ethereum. But I think that would be a top, at least temporarily. So I think you're going to see, if it happens, I think you're going to see a really big spike in the next little while.
What do you see for the U.S. and Canadian dollars?
Yeah, well, currencies, I think currencies are so important for all sectors to understand because everything's connected. Now, with currencies, it's really all about the U.S. dollar. I know I say this all the time on your show. If the U.S. dollar is strong, that negatively affects most other currencies, including commodities, equities, precious metals. So it's really, the U.S. dollar on one side, all these other things on the other. So if the dollar's up, most of those things are going to be down. If the dollar's down, those things get a tailwind. And when it's weak, like I say, the others rally. So when we see, since late October, we've seen the top in the U.S. dollar, and the U.S. dollar has been down pretty much ever since. And it's been moving down as well as the bonds have been going up in the U.S., pushing yields down. So it's just a simple case of if the U.S. yields are going down, then the U.S. dollar goes down. When the yields were going up, then the U.S. dollar was going up. But here's a really interesting thing to me, though. So we've got the U.S. Yields have been dropping. I think the U.S. 10 years now dropped to about 4.15%. But the yields in all these other countries are also dropping, and they're lower than the U.S. yield. So it's interesting to me that the argument is, well, the U.S. dollar is going down and the euro is going up because the U.S. yield's going down, but the European yields are down even more. So it doesn't really make a lot of sense. But I suspect that the Bank of Canada, the ECB, and the Bank of England probably will all cut rates before the Fed does. And if they do, that's going to push all of these other currencies lower against the U.S. dollar because, again, it's all connected. So for the U.S. dollar, near-term resistance is about 108. Ultimately, I could see it hit 115. Now, right now, it's sitting at about $1.03, a little over $1.03 right now. Support then would be 102.50. Now, the Canadian, again, it's all connected. So, it's all connected to the U.S. dollar. So this week, the Canadian dollar has been really weak. The U.S. dollar got a bit of a rise, so the Canadian was weak. And really, investors are really trying to figure out, what's happening with the U.S. economy, because if the U.S. economy is going to remain hotter than the Canadian, well, then the U.S. dollar is going to end up being stronger than the Canadian. And again, we just saw that the U.S. payroll data came out, so we saw employment is stronger than they wanted. So that's not what the Fed was hoping for. So that suggests that the Fed will not be cutting rates. As I mentioned earlier, I do expect the Bank of Canada will cut rates before the Fed does. And if they do, then that's going to hit the Canadian dollar because your interest rate in Canada is already lower than the U.S. If they start cutting before the U.S., it's going to just increase that gap. Right now, the Canadian's trading at 73.6 last I saw. Resistance for Canada is 75 cents. Near-term support is 73.25. Honestly, Jim, I think that the Canadian dollar is going to drop below 70 over the next year.
What's going on with the euro and yen?
Well, the Eurozone, by a lot of indicators, is already in a recession. Certainly a lot of the countries are, and Germany is straight up there. And Germany's, the big engine of Europe. GDP data came out yesterday there, and that signaled stagnation for the third quarter. So, the question now is, what does the ECB do about rate hikes? Their next meeting is December 15th, so, another week. Now, they probably aren't going to cut rates on this one, but I do expect that they're going to cut soon. Now, I just saw a poll of economists. They're all forecasting the ECB to cut rates by April 2024. I wouldn't be surprised if they do it earlier. Again, the euro is a near perfect inverse relationship with the U.S. dollar. So if the ECB cuts before the Fed does, then the euro is going to drop. And then the yen. Well, the yen has been just an absolute gong show. You've got all these other central bankers have been aggressively raising rates to fight inflation, not Japan. The U.S. Fed rate is 5.5%. Bank of Canada is 5%. Europe's is 4.5%. And then you've got Japan. Their central bank rate is stuck at minus 0.10%, and that's been there for the last year. So capital has fled the Japanese yen, seeking better yields elsewhere. So for months and months, we've been talking through this about our subscribers. At some point, the Bank of Japan's got to do something. So there's been so much speculation the Bank of Japan would intervene and give the yen a boost, but they have frustrated traders for months here now because they have not budged. But yesterday, we saw a big surge in the euro, and we saw that all these short positions have been covered. So traders are betting big time that the Bank of Japan is actually going to act this time. So this will be interesting. I mean, the last time the yen was at these levels, the Bank of Japan did intervene to shore up the yen, but so far they haven't done it. Their next meeting is December 19th. And I got to tell you, Jim, if the Bank of Japan doesn't boost rates there, you're going to see some real pain for the yen. So big picture for all these currencies, I just still see that the U.S. dollar will remain strong, not because the U.S. is a great economy, just simply because it's the least ugly economy in the world. So I see Europe and Japan in much worse shape than the U.S. So ultimately, again, I see the U.S. dollar being stronger. I think the Canadian will do okay eventually because we're so closely tied to the U.S. But, short term, I think the Canadian is going to take a hit.
We noticed you added a few new positions in trend disruptors recently. Can you tell us about it?
Yeah, we've been active recently. We can talk about a couple of them, I guess. One thing word of caution here. Trend disruptors invest in solid but speculative companies. So these are investments that investors need to understand that these stocks tend to be very volatile, both up and down, meaning that they can have great gains, but they can also have really steep, deep corrections. So if you're going to invest in these, only invest in capital that you're willing to lose. So the first one we put in, and this about 6 weeks ago, I believe, I think everybody on your show here has heard of it for sure. So we're talking about Shopify. Shopify already has had a significant mark in the e-commerce landscape, but more importantly, it's got this untapped potential. It's been using artificial intelligence to play a really critical role in its strategy to engage businesses, to expand on this platform. And today, it's using AI to simply simplify the process of establishing online businesses. So what they're doing is they're using AI that will now allow anybody to do an e-commerce business on their site, and the AI will help them generate blog posts, product descriptions, analyze sales data, execute marketing promotions tailored to fit whatever criteria they have, and also the AI offering recommendations for enhancing the store profile and design. So I really think it's got a really good long-term run. Now, one thing that people should know is that soon after we recommended it, it had a real big spike. It went up about 30%. So if any of your listeners want to, take a look at it, watch and wait for some pullbacks. I think it's got a great long-term chance here, but you want to get in at a bit of lower price here. Now, the second company, this is one I'm pretty sure none of your listeners have probably heard of. It's called UiPath. Its symbol is PATH on the New York Stock Exchange. Now, this is a company that we endorsed back in April originally, but following that recommendation, the price just jumped. So we actually sold it a couple of weeks afterwards, and for a nice 30 some odd % gain in just over a couple of weeks. But the narrative surrounding UiPath remains as compelling today as it was back then. So a quick background, since 2015, it's evolved into the leading platform for a specific type of automated software. It operates as a software as a service. So basically that means it's a subscription business, very similar to how people get, if you've got Microsoft Office, you pay for your yearly subscription, you get all the updates, you don't own the license anymore, you just pay a subscription. It's a maintenance fee to you. Well, this is the same thing that UiPath does. And it's a beautiful process because you've just got this ongoing revenue stream that comes in. Their customers don't leave. They've committed to this. They're on it. It's a simple once-a-year payment, and off they go. So the software and what UiPath does is they specialize in a software called robotic process automation, and it's a technology designed to automate repetitive tasks. So we're talking about, data entry, transaction processing, communication with other digital systems, auditing, tax filings, and a whole bunch more. We really like this company. We think it holds an incredible opportunity to generate, triple-digit returns over the next few years. Now, same story here. Now, soon after we recommended it, it had a really nice run, so it went up about 30% as well. Now, it's come back a little bit, so if your listeners want to get in on this one, just keep an eye on it. If we do get a market pullback next week and this whole tax law selling and so on, if you see it dip down there, that might be an opportunity to buy.
How can listeners find out more about your services, the Trend Letter, Technical Trader, and Trend Disruptors?
Yeah, they can just go to our website. It's thetrendletter.com, so all one word, thetrendletter.com. So we've got, as you say, those three services. So the Trend Letter comes out every Sunday evening, covers equities, currencies, precious metals, commodities, and bonds. The audience there, longer-term investors who just want to understand what's driving the markets and get recommendations on what sectors to get into and when to get out of them. Technical Trader, originally hedging service, but also now invests in long positions, also covers most of those sectors. It also has its proprietary gold technical indicator, which has been great at, figuring out what gold is up to. Audience here, more active investors, but also long-term investors have also benefited, especially with those hedging strategies. And then Trend Disruptors, just what we were talking about here. disruptive ideas, artificial intelligence, virtual reality, augmented reality, 5G, cloud, Internet of Things. Again, as I mentioned earlier, very speculative. So the audience here, people that want to speculate, but manage your risk with the capital that you can afford to lose. We also have another service called Headlines. This is free, so it's a daily service. And what we do is every morning we review what's happening in the markets, and then we send out the headlines that we think investors should be aware of. And then readers can just simply read the headline, so scan through them. Or if they see something they're really interested, they can just simply click on the link and read the article. So if anybody's interested in any of those, just simply go to the info@thetrendletter.com if you've got some questions, or just go to the website and sign up for the free service for sure. And if you're interested in any of the other services, you sign up for those. All right, that's it.
Martin, thank you so much for being on This Week in Money.
My pleasure, Jim. Have a great weekend. Take care. We'll see you next year.
Yeah, have a very Merry Christmas.
Yeah, you too, bud.
My guest has been Martin Straith, founder of Trend News online at thetrendletter.com. He was speaking to us from Coquitlam, BC. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Martin Armstrong, and Martin Straith. And thank you for listening. If you have any questions for the show or for our guests, you can send them to info@howstreet.com. Now stand by for a company showcase update from RecycLiCo Director of Marketing, Tony Mitchell. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HoweStreet.com.
I'm Jim Goddard. My guest is Tony Mitchell, RecycLiCo Director of Marketing. Tony, welcome to Company Showcase.
Nice to meet you, Jim.
Tony, how would you give us a picture of what you do with the company?
Well, Jim, I've been Director of Marketing for RecycLiCo for just over a year now, and I've been involved with the company for a number of years, providing strategic marketing and communication support whenever management needed it. In fact, I developed the RecycLiCo name and brand back in 2019 when the company was ready to market its battery recycling process to the world at large. Since then, it's been amazing to see how much the company is, and the battery industry as a whole has grown and evolved within the transition from gas to electric powered vehicles, which is, still just getting started.
What are some of the challenges you faced in marketing RecycLiCo?
Well, there's a number of them, but I guess a couple of the biggest challenges we have is that most of the companies we're dealing with, they're so massive and each have their own unique, long-established vetting protocols when it comes to working with new vendors. It takes engagement with multiple departments over the course of months, if not years, before they're ready to make key decisions. We know we have the solution to the battery waste problem, but, it takes a lot of patience, back and forth testing and vetting on both sides before they're ready to do a deal. I've learned a lot, have a lot of patience, Jim. So, another challenge is that while the general public is slowly coming around to understanding that lithium-ion batteries can be recycled, there's still so much misinformation about what battery recycling truly is. And in between ignorance and understanding, huge companies have sprung up over the last few years to fill that knowledge gap with hype and fueled by practically unlimited budgets, when it comes to marketing dollars and whatnot. So, unfortunately, in such a situation, the oxygen gets sucked out of the room for companies such as ourselves who have done the hard work of cutting through a path through, rocky terrain and are committed to delivering a real-world solution to a very real problem of production waste.
Yeah, one of the criticisms of electric vehicles I've heard is, they don't have any plans on what to do with the old batteries. Doesn't your company have the perfect plan for it?
Yeah, no, totally. It's the type of thing that again, the general public is just starting to wake up to this. There, still a lot of people don't realize that's even a possibility. And I think from the perspective of where we're standing, we've been doing this since 2016, from bench scale to pilot plant, and then our demonstration plant, and now we got our joint venture going on in Taiwan. So, it's a situation where we're constantly trying to educate people about the various facets of what we do. But at the same time, we're a stage 2 recycler. So stage 1 is just grinding up the batteries and discharging them and grinding them up into stuff called like black mass. But what we do is stage 2, which is taking that black mass, which is, pretty much toxic waste stuff, and turning it into lithium and PCAM to be able to put it directly back into production. So it's a pretty exciting thing. So we're really excited about continuing to move forward with things, especially when we get a lot of people still looking at what we're doing and vetting the process. So,
what do you see in the company's future?
Well, it's for me, it's a situation where you got to look back in the past, before you can look forward in the future, right? So, way back in 2016, which seems like a lifetime ago now, when we look at everything from week to week, few people even thought it was possible to recycle lithium-ion batteries, let alone recover 99% of the valuable materials locked inside them now. People were burning them back then. That was the industry standards. Nobody wanted to deal with the waste product because it was just something, it was a toxic thing. So since then, though, we've proven multiple times through independent verification that our recovered and upcycled lithium and PCAM meet or exceed the performance of the original virgin battery materials. But, as battery producers around the world learn about what we're doing and send sample materials for us to test, they continue to grow more and more confident in what it is we have to offer. And believe me, as Director of Marketing, I would love nothing more than to tell you who we're engaged with. But because of non-disclosure, I can't really say anything. So with that in mind, as our first commercial joint venture with Zenith Chemicals in Taiwan proceeds, as we continue to strengthen collaborative relationships with brilliant companies such as Nanoramic Laboratories, we got a couple. I think we'll include a couple of links in our latest press releases below this podcast. As the battery industry is awakening to the power of the lean modular approach we're taking and rolling out our highly efficient plants to support their operations around the world, which is what I'm really excited about talking to people about over the next year. Jim, I couldn't be more excited for our future.
Tony, what's the big difference between what RecycLiCo does and what other companies claim to do with battery recycling?
Well, Jim, we're what's called a stage 2 battery recycler, and typically in a stage 1, which is what a lot of other companies are touting they do, but they don't really fill in the blanks about being a stage 1 or stage 2 or show what their technology is all about. A stage 1 is they discharge batteries, and then they put them through a grinding process and create something like what's called black mass, or when it comes to battery production waste, a lot of times is black powder overseas, they call it, which is a higher value product. But what we do as a stage 2 is take that product, that ground up product, and put it through our process and spit out high grade or high quality lithium products, hydroxide and carbonate, and PCAM, which can go directly back into production. So we take that, we take that product and turn it into a multiple of value from what initially goes in. The thing about a lot of these other companies, these recycling companies, I say in air quotes, a lot of times they just buy off-the-shelf third-party equipment and install it in pristine buildings where you could, eat off the floor. Because, the truth is, there just won't be enough end-of-life batteries to feed their operations for years to come. And I think, if you watch how things have been playing out over the last couple of months, we see how that's been hurting those guys and recently. And by comparison, I wouldn't want to eat out the floor of our demonstration plant, Jim. We're busy, continually processing skids of black mass and cathode scrap from potential joint venture partners around the world. trust me, it would be too tasty, or safe for that matter, if you eat off our plant floors. So. And
Tony, you have a little bit of an adventure coming up.
Yeah, speaking of the future, next week I'll be representing RecycLiCo at the Advanced Automotive Battery Conference in San Diego from December 11th to the 14th. So I'm looking forward to connecting with others in the battery industry and discussing what we have to offer.
Tony, for people who don't know where you're traded, where are your shares traded?
Well, we're traded on the TSXV under the ticker symbol AMY, on the OTC QB under the ticker symbol AMY.ZF, and on the Frankfurt Stock Exchange under the ticker symbol ID4. And if you need any more information, do your due diligence and check on our website at RecycLiCo.com.
Tony, thank you so much for the update.
Thank you, Jim.
My guest has been Tony Mitchell, RecycLiCo Director of Marketing. I'm Jim Goddard. Our conversation took place on December 8th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.